In a shocking turn of events that not so shocking in the state of California, State Farm increases California home insurance rate hike request to 30%. They just got on average 17% and much more for a couple of other different kinds of insurance. But now they're going back to the well and they're going, we need 30%. Renegotiating second time around, almost immediately after a week ago getting that initial raise. Their attorneys must have said, well, that went pretty well. Let's do it again. Here we go. The way that the California insurance industry works is pretty wild. They have artificially held down rates for years and years and years. California, I think, pays 19th in the United States for expensive insurance, homeowners insurance. They don't pay a lot compared to so many other states, and yet they have more risk than almost any other state other than like a Florida or a Louisiana, something with some major natural disaster kind of stuff going on. Let's watch this video. This video indicates, keep in mind, this was that first, oh my gosh, rates are up that much? Yes, they are. And now State Farm has come right back and said, we want more. Will they get it? Odds are they will. Let's watch this video. This is kind of where we were a week ago.
A big blow for homeowners today. The state's insurance commissioner gave State Farm the green light to raise property insurance rates as high as 38%.
Big. That 38% is going to 56%, folks. 56% increase.
Jump, and this rate hike will go into effect in a couple of weeks, June 1st. 7 on your side, Stephanie Sierra is here tonight tracking the very latest on what will be a blow for some people.
Oh, certainly, Dan. And, this process is far from over. In fact, this ruling comes 5 weeks after State Farm's hearing in Oakland where it was discovered the company's actuary admitted they did not do the formal calculations required by law to substantiate these rate hikes. Yet the judge who works under Commissioner Ricardo Lara still signed off on it. Here's what to expect. Starting next month, millions of Californians will see a sharp rise in their home insurance premiums as the country's largest insurer, State Farm, got approval to raise rates by 17% for homeowners, 15% for condo and renters, and up to 38% for rental dwellings.
It's a huge disappointment for consumers that the judge has suggested consumers should pay now, but allow State Farm to wait months before proving up their rate hike. That's what we're seeing with this decision today.
State law requires insurance companies to justify increases before they take effect. But that didn't happen under Commissioner Ricardo Lara.
We sleep at night thinking how we're going to make this.
After paying State Farm for 30 years, 𝗪𝗏 says the company recently denied her only claim.
I want to get out of State Farm completely. I don't trust them anymore.
This will be State Farm's second rate hike since March last year, forcing 𝗪𝗏 to sell her family heirlooms.
I had some gold jewelry that was passed down from my mother to me, which meant a lot to me and breaks my heart.
The problem is you've been paying below market rates for years and years and years because California has a policy with insurance that they put the insurance companies through such a ringer that the insurance companies have been like, we're not doing that. We're not going to go through that little song and dance. We're not going to dance like a monkey for the insurance commissioner. Screw that. We'll focus on our other states. But now the risk is getting so great with the California wildfires and everything else and costs and everything going through the roof that State Farm has said, no, we need an increase. And you just gave us the one increase. 17% increase. Well, now we need another 11%. We're going to go right back for that 30% we were asking for beforehand. So if you are a consumer, unfortunately understand this is policy by your government coming back to bite you in the butt. The policy versus reality, which is the insurance companies are saying, we can't get these increases. We're gone. And then you're forced to deal with the FAIR plan, which is super expensive policy, but minimal coverage. And nobody wants that either. So all of this insurance stuff, so much of this is self-induced policy to protect the consumer. And now that's coming back to bite you guys in the ass.
I had to sell to make those payments.
𝗧𝗜𝗠𝗘 is a former deputy mayor of Los Angeles, now leading the Eaton Fire Survivors Network. The group sent a letter asking the commissioner to investigate State Farm, including nearly 400 personal messages from survivors, raising alarm about the company's practices.
In spite of all this evidence, all these accounts of State Farm failing to fulfill its obligations, he's gone ahead to reward them instead of investigating them. So we are disappointed. This is the guy that we elected.
Meanwhile, State Farm says it's paid out more
How's that working out for you?
$1 million to customers in the wake of the LA fires. The company applauding the decision, saying today's emergency interim rate approval by the commissioner is a critical first step for State Farm General's ability to continue serving our California customers. As for the rest of us,
This could set a very dangerous precedent if it stands for other insurance companies. If State Farm can get a rate hike before justifying it, what's to stop the rest of the insurance industry from seeking the same concessions?
I think you are misguided at best if you think that State Farm can't justify these increases. They've got a slew of attorneys looking at the odds. They're odds makers. Let's be honest. They're odds makers. What are the odds that if we take this to court, we will get another increase? And their attorneys said, this is what happened in that last hearing. This is what we'd expect moving forward. State Farm Corporate said, yep, let's roll the dice. Let's do it another time. And boop, here they are. And this is how you get to increases California insurance rate hike request to 30%. That 17 is going to 30%. And a bunch of other increases that let's read about. Let's see if we got this squared away. A week after securing I know this isn't exciting stuff, but this is like stuff that, everybody's looking at California going, oh my God, the dumpster fire continues. Those poor people. You voted in these folks doing this, and you had all this policy that's been years and years and years in the making. It's like high gas prices. Same thing here from Washington State for me. None of this happened overnight. You voted in officials that did these numb-knuckle stuff that, you just pull out the gun and shoot yourself in the foot. Week after securing approval to raise home insurance rates by an average of 17%, 1 week after, State Farm General revealed plans to ask regulators for an additional 11% increase. Let's just go right back to the honey pot. That honey was good. As well as considerably higher rates for condo owners and renters. The 17% increase set to go into effect in June was granted last week by Insurance Commissioner Ricardo Lara following a months-long proceeding that was classified as an emergency following the Los Angeles fires. They've got the state of California over a barrel because the deal is if they don't get these increases, moving forward, it's going to be difficult for us to stay in business. And Laura, he's asking them to provide proof. Well, how about that fire we just had? How many billion are you paying out for that? Okay, yeah. And the rates that you're charging right now are how much? Oh, okay. They're basically way below market rate compared to the risk. Okay. I mean, these are business decisions, right? State Farm had originally requested a 30% rate hike in June 2024, and now with the 17% emergency rate hike approved, 17 is done and in place, wants to return to its original number. We'd like to go back. We'd like to revise that number. The request, if granted, would go into effect in 2026, amounting to an 11% hike on top of the previous 28% hike. I almost guarantee you that'll happen. Then maybe it doesn't happen with an 11% hike. Maybe they get 8, but that's 8 more than they had with the 17. And that's probably what'll happen. A hearing slated for this fall will allow State Farm, the largest insurer in California, to argue for justifying the full 30% rate hike it originally sought, according to new documents filed with the state on Monday. The lawyers, they dwell on small details and they throw a bunch of stuff against the wall. That stuck. All right. Moving forward, here's what we do. We're going to go in for another increase. Won't happen till 2026, but we've got the numbers to make it go now. I don't know what the reality is, but when I do those kind of things, when I throw out those kind of scenarios, I am literally throwing out in my mind what I think, is happening. I could be completely off. but I'm not that far off, right? The insurer will also ask for higher increases for condominium owners and renters. In June, rates for these groups are due to go up by an average of 15%, but the new requests would bring that up to 36% for condos. That's a run. 36% for condos. Boop, up 52% for renters. Wow, that's a jump. For rental dwelling policies, that should say non-owner occupied, a type of insurance that protects landlords who rent out their homes. State Farm is only petitioning for final approval of the 38% rate hike that was initially approved earlier this month. So whether it's 30, 52, 38, rates are going to the moon. And I think they will get it. I don't think there's any way that the commissioner, looking at the numbers when he really gets down to it, can say, oh, yeah, no. You guys are getting greedy. They want more. So State Farm did not immediately respond to a request for comment. They want more. We want more data, more transparency, more policyholders served, and more policies written in wildfire distressed areas. Okay, but do you see how the direction this is going? You already got some data, and that was approved. You already had transparency provided by State Farm in that hearing, and it got approved. More policyholders served. That's part of the deal, right? You gotta keep going. And more policies written in wildfire distressed areas. Okay. So what you're saying is you want them to write policies in areas that they know they're going to have a payout. All right. You're going to have to play ball. Got to play ball because they've got the ability to go, California, not so much. We're going to focus our efforts on elsewhere. Come visit us online. Wanting doesn't change the law. All rates must be justified so consumers don't pay more than is required. Well, they just got an increase, so what's going to stop them from getting a second one? I'm listening. I'm waiting. Just because? Nah, because then you've got an insurance industry that is relying upon the FAIR Act or the FAIR Plan. That thing is a piece of crap, but it's better than absolutely nothing. Though State Farm agreed to lower its rate hike request on an interim basis to 17% during a recent hearing before an administrative law judge, the full 30% was never off the table, said Carmen Balber, executive director for consumer advocacy group Consumer Watchdog. Balber's group participated in the rate hike preview process and opposed the 17% rate hike at the April hearing. On Monday night, she said the group had not yet reviewed the new data submitted by State Farm to see whether it justified the large price hikes it's asking for. I think they're justified. Real world scenario, I think they're justified. I'd love to be able to say different, but this is literally policy in California that is long overdue for price increases because the way that the insurance is situated, you've been held down artificially. And what happens when you artificially hold down a business environment? Something goes tilt. And in this case, it's State Farm saying, we're out of here. We don't get what we want. We're out of here. During the hearing, Laura pushed State Farm to secure $400 million loan from its national parent company, State Farm Auto, and to hold off on non-renewing large numbers of customers at once until at least the end of 2025. So State Farm's going to, all right, 2025, but what about 2026? We're just going to start doing that. We're going to boop, done. Consumers will have their insurance cut. You're already seeing that. You're already seeing that en masse. And that's part of the deal here, right, between the state in the insurance industry, specifically State Farm in this case. But Balber noted that they made such a promise with only 7 months of the year to go. Let's limit our downside. 7 months? All right, we can do that. We can do that standing on our head. What I think is clear from today's rate filing is that the commissioner didn't win anything for Californians in this proceeding, Balber said. Well, that's because the insurance commissioner is kind of bent over and taking it. What options does he have? We need more transparency. Here's the numbers. So the article goes on to say right here, we've got $7.6 billion in claims. And I am not an advocate for the insurance industry by any means. I'm just saying this is news for reasonable people. What's the reality? The reality is you guys have been underpaying for decades. now it's coming back to bite you in the ass. And I'm sorry, that absolutely sucks. Nobody likes to either get cut off from their insurance or have a massive premium. But the reality is the State Farm saying, hey, we'll play ball, but it's going to cost you. Here's the deal. This is what we want. State Farm has maintained that those losses would warrant a large price hike. When insurance companies apply for rate increases, they let regulators know the maximum increase they feel they could justify. That's their starter offer, right? That's their highball. We'd like this. And the insurance company comes back and says, we'll give you this. And the insurance company, back and forth. They feel they could justify under a formula enshrined in state insurance code. It's typically much larger than the rate request they actually ask for. That's why I think the additional 11%, that'll get cut down. State Farm's case, it initially told regulators last June it could justify an up to 32.8% hike for homeowners while requesting the 30%. That's what they said they ran their numbers. They crunched their numbers based on the state formula. It's what we think we could do. But you know what? We're going to be a good insurance industry. State Farm's really going to play by the books here. And this is what we'll accept. We'll accept a 17% run. Its latest filing documents indicate the insurer believes its maximum permitted rate hike would be 77%. Huh. That happens. Maybe doing that podcast. The fall hearing, State Farm will be required to defend. This is the fall hearing in 2025. Be required to defend its requested rate hike using facts and data based on the data and the science. Oh. Solar said a judge would approve the full request, or the judge could find that even the emergency approved rates were excessive. In that case, the commissioner would order State Farm to refund its customers because they're going to be paying from June through the end of the year. Then they've got that rate hike, and then they're talking about another one back to back for 2026. You're going to have some unhappy people. You're going to have some people leaving California because you got so many people that are struggling with housing. And now it's not just the affordability issue. It's not interest rates. It's not down payment requirements. You can't get a liar loan anymore. It's you can't get homeowners insurance. That's a huge component of buying a home. And in most other states, it's a formality. It's like, who are you going to get your homeowners insurance from? Allstate. Okay. Can you provide us the binder? Sure. And you call up your insurance company. I'm buying the house at yada, Northeast 22nd Place. I'd like you to, rough out a policy for me. All right. What would you like to see? I'd like to say this and this and that. And you just take that binder and you send it to your lender and they go, okay. And they make it happen. Then if you discontinue that policy, they will give you a hardship policy. They will give you a policy, a high-risk policy, because you're in default. They're going to be covered. The lender is going to be covered. If they have money on the line and there's a mortgage and you get that mortgage, you're going to cover your mortgage company, your lender, your ultimate lender, with an insurance policy. And that's why all of this is so critical, because the ability for the housing industry to have liquidity is being impacted by homeowners not being able to get insurance policy. And that's why we're doing so many podcasts on this, because this is a huge deal. And what happens in California happens on West Coast, Best Coast, and then it trickles to the Midwest. And then some Midwest states say, no. You know what I mean? Like Arizona, no, we're not doing that, whatever it might be. But expect this topic to keep on going, because we've got those hearings in fall. A little something to look forward to, right? All right. That's it for me on this one. Thanks so much for being here. I'd love to have you subscribe, hit that notification bell, all that good stuff, even the like button. And I'll see you on the next one. Bye for now.